Hi believers, this is Amit from our team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian market started the new Samvat on a positive note, with benchmarks hitting a fresh 52-week high during the week and extending the weekly gains in the fourth consecutive week for the first time in 2025 amidst hopes of an India-US trade deal, FIIs turning buyers, and a decent set of Q2 FY26 earnings. The Nifty 50 climbed 0.3%, while Bank Nifty was flat. The broader market, the mid-cap index rose 0.5% and the small-cap index rose by 0.7% for the week. Banks, financial institutions, and metals are gaining momentum, driven by a wide variety of individual factors. For banking and financial names, it's expected rate cuts increasing the liquidity and a flurry of recent deals making activity that is creating investors' interest. For the metals and mining sector, it's largely the earnings that are driving the strength. Q2 FY26 earnings continue to pour in, with 341 companies have declared the results so far. Overall, the earnings trend looks healthy compared to the previous quarters, which is a great news. And it is one of the main reasons behind early signs of bullish sentiment in the market. Companies in sectors like NBFCs, pre-engineered building segment, wires and cables, wealth management, and CDMO pharmas have reported very good set of numbers. The FIIs turned net buyers for the week as they bought equity worth of rupees 344 crore, while domestic institutional investors continued the buying on the 27th week as they purchased equities worth over 6,000 crore. To give context, the Indian equity market has witnessed a stellar rally this October, with benchmark Nifty surging over 1500 points from its low of 24,600, all within just 15 trading sessions. The swift upswing highlights strong bullish momentum driven by festive cheer, robust domestic inflows, and improving global cues. Interestingly, during last week, Nifty came very close to its all-time high, raising expectation of a breakout. However, the index couldn't hold on to the gains and saw profit booking, indicating that the investors are now adopting a more cautious stance after the steep rise. This pause in momentum has resulted in the formation of a shooting star-like candlestick pattern on the weekly chart, a potential sign that the uptrend is losing steam or signs of consolidation before market rise further. The pattern reflects that bulls attempted to drive prices higher but faced selling pressure near the top. Still, a confirmation in the form of bearish follow-through candle is needed to validate any reversal signal. From a technical perspective, the 25,500 zone will serve as a key support area, being the confluence of the 13-day moving average. And on the upside, the 26,000 range will act as a crucial resistance zone. A sustained move above 26,000 could open the doors for a sharp rally towards 26,500 level. Looking ahead to the next week, there are increasing signs of the US seeking trade and economic agreements with China, India, and Korea. Progress or setbacks in these conversations will likely influence market sentiment. In the US, the Fed Reserve Policy Committee is scheduled to meet on October 28 and 29. The policymakers widely anticipate to reduce the central bank benchmark interest rate to ease borrowing cost. US stock surged to a new high on Friday as traders cheered softer than anticipated inflation data that underpinned expectation for Federal Reserve interest to cut the rate further. Additionally, market participants will monitor developments surrounding the scheduled US-China presidential meet, which could further ease trade tensions and impact global market. The ongoing Q2 FY26 result season will continue to shape market direction, with several major companies scheduled to release their financials within next 2 weeks. Although Nifty may be at high, you may be wondering why is our portfolio not moving equally. The reason is Nifty has only 50 stocks and only 7 stocks have showed the movement, taking the index up. We believe broader markets may rally sharply once it's seeing the earnings. We expect equity markets to give double-digit returns over the next 12-month period. Valuation too remain reasonable with signs of FIIs coming back to the India one should continue to add stocks on dips. Slow and steady good returns will be made. That's all for today. Wishing you a profitable trading week ahead. Thank you.